Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Thursday morning, overnight. A bit of a drift, not very much decisive in terms of price action. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning, folks. Not too much by way of mega Qs, some consolidation on Wall Street as well. But it's a special day for Nigel.
Well, indeed, it's my daughter's birthday. So happy birthday, Nitara. It's a special day for me, my family, and little Nitara as well. But obviously, we've got markets to contend with. And later on in this evening, I'll be trying to make Nitara happy. But hopefully, the bulls are happier by the end of today.
Cherish these birthdays. Now.
Absolutely.
They go by fast. Well, let's just, take it from the top then in terms of where we are. As I said, overnight, it's a bit of a drift. And equities sideways, not very much by way of a cut. S&P down about 0.25%, the Nasdaq down about 1/3%. So, these are not changes which will move, the next morning markets in any decisive way. You had a voting member of the FOMC who delivered some hawkish comments in a Financial Times interview. And that kind of stood out. But the point is that so many people have spoken since the FOMC decision last week. And bulk of it, except Stephen Moran, who's essentially said that, the risk is to not cut. Pretty much everybody else has said that it's not an easy path forward for rate cuts. So to assume that rates are heading lower and it's an easing cycle is not exactly what you should be looking out for. So this was more in line with that. But anyway, the 10-year yield, 4 basis points higher. They were down 2 day before yesterday, up 4, so 4.14% of the 10-year. Dollar index had a bit of a move, about almost 0.6%. We are almost at about 98 on the broader dollar. Oil prices also perked up 2%. So oil's now about $69, so closer to 70 is where we find ourselves at. And there's no new driver in that sense. For oil. I've been sort of getting through one or two single stocks out of the overnight markets because they've been so noticeable. So Intel was up 6.5% on reports that it has approached Apple about securing an investment in itself. In the chip maker. So 6.5% pop there. Alibaba, 8% higher. And this after the company planned to, that's the number floating up $50 billion or something in terms of AI spending. And there's a company called Lithium Americas, that went up 95%. The stock was up 95% following reports that the US government is considering taking an ownership stake. Now, the only reason I'm mentioning this is because it is, they mine lithium, they mine for lithium. And this is one more step by the US, looks like it's one more step from the US government, direct intervention, taking stakes in companies, to secure critical supply chains. Be it lithium, what happened with Intel, and of course, I think many more are being considered. So I thought I'll just put it out. Well, let's just quickly tie in the levels here. Nifty has seen about 4 days of straight cuts, negative closes. And, we've, by the way, got a negative crossover as well yesterday. We'll see. Not making too much of it for the time being. We ended around the 38.2% retracement level. Support then comes in basically because we've at the 38.2, the 50% retracement and the daily averages. So the zone of support is 24,950. Or 24,940. Basically, that's the zone. 24,950 is the support that one will work with. Resistance is the 40-hourly exponential moving average, which is 25,181. That's a Nifty. The Nifty Bank, it broke the 40-hourly exponential decisively. So here now support is the 50% retracement and the 20-day moving average. Those levels come in at 54,777 and 54,622. If you can have the levels up, they'll come up on your screen. Those are the numbers. So 50% retracement and the 20-day moving average are on your screen. These are supports. Resistance at 55,662 and 55,835. All, as we always do, very, very, very near-term sort of levels that we are working with to look at markets on a daily basis. So GIFT Nifty will give you a quick sense of how we're likely to start. and then we'll pick up the action from there. 30 points lower is where we are at. Nigel is standing by with the F&O picture and how they're looking. Nigel, good morning.
Well, morning. It's a bit of a make or break day for the bulls and for the bears today because the Nifty, it's a very, very crucial juncture. So we'll have to see how things pan out today. But I think today is an important trading session. Now, in yesterday's trade, when you look at the open interest, there was some mild build-up on the Nifty side. But on the Nifty bank, there was some unwinding. So unwinding of positions post the big run is what we saw on the Nifty bank. The other cue is that the Nifty ended lower, yes, but the India VIX cooled off as well. So that's normally an indicator that in the near term, there's no big reason to panic just in the near term. And also we have expiry that will play out next week. So the IVs are lower out there. So that explains why we had the VIX lower with the Nifty lower as well. One problem for the markets in the last few trading sessions are the institutions have been net sellers. So the FI selling has outweighed the DI buying and institutions remain net sellers, which is putting some pressure on the markets and prevent it from moving up as well. Moving to what the FIs did then in the F&O market, well, they added shorts. So shorts are back in vogue. Yesterday, 2 shorts were added for every 1 long position. But as you can see, the short positioning is still at around 85% or thereabouts. Even on stock futures, actually, if you look at the short positioning, that was in the ratio of around 2:1. So there were some shorts that were added into the system. As I normally say, having some shorts in the system, it provides some kind of a breather, or it could give rise to a relief rally. So that's not a very, very negative data point according to me. Moving to the options data then, you have 2 strikes that were active, the 25,100 call. Just take a look at the call writing. These call writers are getting very, very confident right now. Massive open interest build up is what we saw yesterday. And on the downside, you had this 25,000 put. That saw a good amount of open interest build up. The premium is around 60 rupees. So just tying in the levels, going by the options data, the 20 DMA as well as by the options data, this 24,900, 24,950 mark is extremely important. For an adventurous trader, one may want to say they'll put the stop loss at around 24,900 and hope that the markets recover from here on. So that's going to be the important trigger on the downside. On the upside, just going by the options data, that's the resistance zone. But the Nifty bank will have to play its role. Yesterday, it gave it away. And in the last few trading sessions, it's been making lower highs and lower lows. So for today, in fact, if you want to see a bit of a fight back, well, the Nifty bank will have to make its way towards that high that we saw yesterday. So around 55,500, 55,600 becomes an important resistance mark on the Nifty bank. Finally, a stock that I'll be looking at today is Polycab. You pull up the intraday chart yesterday, you'll see that the stock ended virtually at the low point of the day. So there was a bit of a sniff that there could be a large trade. Sometimes post these large trades, you see quite a lot of action. So maybe let's see whether or not the stock recovers. But if you pull up an intraday chart, Polycab promoter taking some mild money off the table. Remember, since listing, the stock is up more than 13 times, but pulling out a piece of the pie that they've created. So I'll keep an eye on the stock post the clearance of this particular large trade.
Okay, all right. So definitely in focus Polycab on that promoter stake sale that's happened. Asian markets quite mixed because the handover from Wall Street was fairly mixed. So you have Japan that's still showing up some gains, but the Hong Kong market is a little quiet, flat. And ditto for mainland China as well. Markets more or less flat. There's some profit taking in South Korea as well. So not too many major moves across Asia. Let's just pull up the GIFT Nifty and the implied open again. Yesterday was another sort of down session. And the indication is that we'll probably start 30 to 40 points lower again this morning. And then we'll pick it up from there.